Funsupermart.com.
What is your outlook on China equities in 2013?
China in 2013 will offer pretty good returns, but I think you have to do quite a bit of homework because a lot of things have changed in China the last 20 years. Previously, you can just buy across the board what you like in China because everything is growing rapidly. But going forward, I think the economy has matured somewhat. So different sectors will perform differently. So you need to be able to identify stocks that benefit from the changing economy and sectors that benefit from that as well. Okay, there is money to be made next 2 years at least, I think, in China. There's a lot of new reforms that they need to do, and because of that, there'll be a lot of new stock, new sectors. I won't say new sectors, but sectors that get revived from previously, or sectors that no longer in favor for the time being. So there will be ups and downs. So you have to be very selective. So effectively, you need to do more homework on that.
What are some of the key performance drivers of China equities?
For China, the underlying growth is very important. Anything from 6 to 8% will be good enough. Because the value added generated at 6 to 7% or 8% growth will be equivalent to what is considered 10% growth maybe 5 years ago. The value generated will be the same. But what is important is the reforms that the government need to do. Because after all last 20 years of growth, you already see, you can identify which is the strong part of the Chinese economy and what is the weak part. And unfortunately, at this point, the weak part will be income distribution, the political system, and partly the high dependency on the banks. So there are a lot of changes or policy changes that you need to push through, but how much willingness or how fast it will proceed to some extent will depend on how much power the Politburo have. It doesn't help if there's a lot of political infighting. The new regime that was just came in December and November have said fighting corruption is the #1 agenda. But unfortunately, every 10 years when there's a change of regime, fighting corruption is always #1. But then the progress seems to be quite slow. What you see coming out very fast is economic reform. So the question is, would the current political structure be able to support the current economic structure? It's very different now compared to 30 years ago when Deng Xiaoping says go forth and we grow. Compared to now, it's a very different situation already. So other than reform, economic growth, and also the one thing that they have to be very careful of is their demographics, because the Chinese population is going to be classified as aging, maybe another 3 to 4 years from now. And it's also very clear that they would not have sufficient workers or people to be employed for certain types of industries, maybe another 8 to 9 years from now. So they would need to think of how they change the education system, whether they want to do away with the one child policy, loosening of that. So there are demographic changes. One side, people are aging. Older people need different requirements, have different impact on the economy. And if they think that they need to partly revive the population structure of the age group, so I think most likely they need to do away with the one-child policy. And what would be the benefit of having one-child policy? And then you must think of people, company, in sectors that would benefit from this sort of thing. This is a very broad, but the demographic change is unavoidable. It's happening really. So you will have to think of companies, reforms, even financial reforms. They can even do things like pension scheme, private pension schemes and things like that. So there are always players, in all sorts of players that can pop up in when so many things are available to toy with.
What are some of the key risks of China equities?
Key risk is definitely the reform is slower than expected. Because it's you see, it's a one-party, one-government system in China. There's been never change of government before for the last 50, 60 years, right? You run the risk whereby there's complacency. They think that you can ignore the people. But I think after Tiananmen, they fully realized that they cannot ignore the people. That's why in the Chinese constitution there is a social harmony clause, everything to sustain that, to make sure that there's no recurrence of a Tiananmen. But unfortunately, with the rapid growth, and usually when you embrace capitalism, the reality of capitalism is most of the time you have a income gap. And income gap in China have widened tremendously. So you need to do a lot of stuff, a lot of policy changes, but not necessarily that is popular with the people who got rich because of the existing structure. You see. So what I would not want to see is more and more demonstration in China, which could happen. Because if you don't do reforms, the people get angry and they start jumping up and down, having demonstrations. Then you do only reforms or changes piecemeal, it will look very bad on you. And usually when you do it, you do this and you do this, you jump about, it will never be something coherent, and effectively you create more trouble for yourself down the road. Because the pieces do not fit together very well, and you have to sit down and ask yourself how you're going to fit the pieces down together eventually.
Which investment ideas or sectors within China market you are bullish on? I
think given the income level or all these things, what is very important is the fact that the income level has reached a stage whereby people are starting to say, I got a headache, I should see a doctor. Last time is I just go somewhere, get some herbs and boil and drink and things like that. I mean, traditional Chinese is still widely practiced and people still believe in that. But the fact that there will be people demanding more and more for health services. So you talk about people, not only pharmaceutical, hospitals, equipments, requirement for doctors and stuff like that. There's still, if you read Chinese newspaper or Chinese online blogs and things like that, you get people waiting in the hospital and die in the waiting room. Things like that still happen. All right? And of course, there's also the gap whereby East Coast city, the coastal cities are so much richer than the West Coast city. You need to do a lot more development in the western part of China. I would say one of the words that came out of the thing is there's something called urbanization. Urbanization doesn't mean that you just focus on the first two-tier cities like Shanghai, Guangdong and Beijing. If you start developing the third, fourth tier cities, I think you will generate more value added. Because the income level there is much lower. And effectively you need to try to push them up. Urbanization is just not a matter of building more roads or building more houses or expanding the town area. It's a matter of providing the facilities that an urban or city should have. Like even including rampways for the disabled, things like that. Or more underground trains and things like that, or better sewage facilities, roads and all that stuff. That's something that we could look at it on a more holistic level. Than just thinking, when people say, urbanization, build Shanghai into a bigger city. No, it doesn't have, it's just not something like that. It's beyond that.
Conversely, which investment ideas or sectors within China market you have the least conviction in and why?
I'm not keen on going forward for a while. I may not be very keen on the oil and gas sector because I think there will be a lot of restructuring of the taxation scheme, the tax structure on resources in China. And I wouldn't be surprised if they start to tax the oil companies and gas company a little bit more, because I think they also realize that there is a huge amount of subsidy out there in the market in China. I think they tend to slowly withdraw the amount of subsidies in the market, and that will be one. I may not be exactly very, very bullish on banks. Nothing to do with the NPLs. Of course, everybody says there's a huge amount of NPLs hidden somewhere in the balance sheet and other stuff. But I think what is inevitable is that there will be a more capital market reform. There will be more players and much more intermediation, in the sense that bank loans would not be the only source of financing. They would need to further develop the capital market, the fixed income market in particular. That would jive with the aging population, because you have a pension thing, you need to match the pension requirement and stuff like that. So you need a more dynamic and more vibrant fixed income market. Not only that, on everything that goes on with it, it's a machine with lots more modules being plugged on. I think they need to plug on a lot more modules, and usually what it means is a diminished role of banks to some extent, and to some extent maybe even because of that, banks have to be even more competitive, so their margins get hurt, and so that's something that we have to look out very carefully. And maybe even construction companies and stuff like that. You can always continue to build a lot of things, but China built a lot of things for the last 20, 30 years. So the marginal impact that you can get on the construction company and profitability will diminish very, very fast. If there's a case, then there's rarely the case to be very constructive, to have more investment in that sectors. The other things that one can look at, that one not look at, would be maybe providers of railways, tracks, and all that stuff also. Those are the few things that we have to be careful about.